A lot of people actually hear investing, stocks, shares, and they just fly and leave the topic because they feel like it's a risky and a complicated topic. Because they feel like anything that has to do with understanding their money, understanding their finances, everything as regards investing, stocks, shares is just something that's too complicated for them and they feel it's difficult to understand. But the fact is that it's really not that difficult. You just need to give yourself the grace to be able to understand it, okay? But here, I'm going to break it for you step by step. Now, let's look at the stock market as a normal marketplace. Let's talk about a normal marketplace that you go to buy your tomatoes, you go to buy your rice, you go to buy your yam, stuff like that. Let's look at it as a normal marketplace, but instead of selling yam, tomatoes, meat in the market, you actually meet people selling companies, like little piece of a company. People are selling different type of companies and you are supposed to buy from any company of your choice. And you're going to be having a little part of that company as compensation for your money. Do you understand? Now, this little piece of the company is what we call shares, or you call it stocks, okay? And for you to qualify to be able to buy this company, you just need to have your money to be a part owner or to be a co-owner of that company, okay? I don't know if you're understanding this, but instead of selling yam, selling gari, selling oil, we are selling companies in this market, and your ability to purchase from these companies is what will make you a part owner of that company. And that pieces of company you bought is what is called stocks, is what is called shares. So it's still the same thing. Shares, stocks is still the same thing, okay? A lot of people will be asking questions around, okay, why do companies even need to sell shares? They already have money. Why are they selling shares? But the fact is that every business needs capital, and a lot of capital in some situations to actually expand or survive, okay? Now, these companies, most times, they sell shares because they needed to expand their reach. They needed to expand the company, they needed to expand the market, or they want to venture into another part of the market. For example, a company that is known for selling cement might want to diversify their company by venturing into other building materials aside from cement. And most times, they might not really have the 100% capital to go into this business. So they might decide to sell part of their cement factory or company to actually raise funds to venture into that other business that they want to start. And in compensation for people that have bought from them, they go ahead and offer you a partnership, a little piece of the company as your own compensation for the money or your payment for the money. And now there are other companies that will go as far as paying you dividends because you invested, you bought the shares of their company. Now what it means is that this company have given you a piece of their company and you're now a co-owner of that company, and they still go ahead to pay you dividends when they make profits in this business or in this company, whatever they have decided to do with the capital they've raised, okay? Now, not every company, not every stock has the ability to pay you dividends. When you're trying to invest, you have to check for companies that pay dividends. If that's the kind of stock you want to actually get, you have to check if the company pays dividends, if they pay their shareholders dividends or not. Not every company pays dividends, okay? Okay, now let's talk about why prices in the stock market actually goes up and sometimes it comes down, okay? Now, this is the reason why prices go up and sometimes it comes down. This is simply because the stock market is volatile. There is no specific way a company will sell. Just like in every business, some days you open up and you make a lot of sales, whereas other days you might come and it's really not going to be that rosy. That's the same thing that's happening to the stock market. Some days shareholders might feel like, okay, this company is not really paying me the way I feel like it should, or they're not really making profits the way I felt like they're going to be making. And for that reason, I'm going to sell my shares. I'm going to sell my part of the company that I own, okay? Now, when we have a lot of people selling the shares of a company, automatically the price of the company shares is going to drop because now they have a lot of people willing to sell off the shares that they've bought, because for personal reasons, they might think, okay, I'm not seeing the future with this company, and so I don't want to hold their shares for that long. Now, when we have a lot of shareholders willing to sell off their shares, definitely the market is going to drop because you can access those shares at a very good price, okay? Now, other times, you find out that investors are actually willing to hold on to a specific shares because of some situations around. Maybe they've seen that, okay, this company is going to do well in the next 1 year, in the next 2 years, or this company is actually where the heat is going now, maybe like in petroleum or whatever field that they're into. They decide that, okay, according to personal reasons or according to happenings around, they now see that stock going high. They see good potentials when it comes to the stock they're holding. Okay, for example, let's say I'm holding Dangote Cement and I see that a lot of buildings are coming up, a lot of places are opening up, and I feel like Dangote Cement is actually one of the largest cement companies that we have in Nigeria. And I feel like in the next 2 years, 3 years, they are really going to do well because of the opportunities I'm seeing opening up right now. So for that reason, a lot of investors want to hold on to their investment. They want to hold on to that stock that they've gotten. That's the shares they've gotten, okay? So they are not going to be willing to sell. And because they are not willing to sell, the stock price is going to be high because now everybody is seeing the opportunity that is springing forth, and we want to wait and make that money. Nobody wants to let go of their shares. We want to hold on to it, okay? Thereby making the price of Dangote Cement to become high in the market because a lot of people are not willing to sell. Rather, people are willing to hold on to it for a longer time. But the irony of all this is that in as much as the market is not predictable, the fact that a share is hyping does not always mean that it's going to be the best in the market. Most times when a share is actually crashing down, it's actually the best time for you to buy as an investor because you're going to get it at a very good price, a low price, and probability is very high that that shares that is crashing down will always go up. All you need to do is to give it time. And this is the reason why we talk about investing, and I will always say that it's not really a get-rich-quick scheme. It is actually something that you're willing to give time. It's something that you're going to be consistent with. It's something that you patiently wait. You need that patience. If you're not somebody that has patience, you're somebody that wants to give it time, you just want to like make quick money, then investing might not really be for you, because investing is actually a long-term goal. If you want to invest and enjoy it, it's just a game of time and money, okay? Time and consistency, and also patience, because some people don't have patience. The moment they see their portfolio showing red, they will want to sell and let go of that stock. But the irony of life is that you might sell now, and in the next 1 week or 1 month, that same shares is skyrocketed and it's the main thing in the market. So there is no certainty, there's no guarantee that is investment for you. So it's just basically the law of demand and supply. When the demand for that shares is high, the price of that shares is going to be high. But when the demand for that specific shares is low, people are willing to sell, a lot of people are selling, then the price is really going to be low. And that is why the market goes up, the price goes up. The market is down, the price comes down. Okay, that's just how it is. It's just the law of demand and supply. Just the law of demand and supply, nothing else. So now, let's talk about the ways that you can make money from the stock market as an investor. The fact is that there is no any other secret way to make money from the stock market except for these two ways. And number one is when you get these stocks for, let's say you get it for 500,000, or let's just use 50,000 as an example, okay? When you get the stock at the initial time you got it for 50,000 and you've given it time, and over time, the value of that stock has risen up to like maybe 150,000 or even 200,000, okay? At that time, if you're willing to sell and you sell it, you get value on your capital because now your capital has appreciated, and the 50,000 stocks that you've gotten has now appreciated to 200,000 or 250,000 or even 300,000 or even more, okay? There are some stocks that can get as high as 100% return on it or even more, or even 200% return. It depends on the kind of stock that you've invested in, okay? So it means that you've actually gotten return on your investment because now you got that stock for 50,000 and now you're able to sell it for 200,000. If you wanted to sell, you can sell and you get your profit on it. Now, secondly, the other way that people get money or get profit on their investment is when the company that you've gotten their stocks are actually willing to pay dividends. There are a lot of companies out there that pay dividend on their stocks. They pay their shareholders some percentage of money quarterly or annually based on the policy of the company, okay? Now, these are some of the things that you need to check when you're buying a stocks. Is it a dividend paying stocks, or is it a stock that you can just buy and hold and over time your capital appreciates and that is it? Or is it the kind of stocks that can actually pay you every month or quarterly or yearly? You have to check those things out, okay? Those are the kind of ways. That's the different type of ways that you can actually get money on your stocks. If you're being paid dividends, most of the companies can pay as high as 18% annually. Some pay less than that, and some can always pay higher than that. Especially equity funds, they pay higher, but of course with higher risks, meaning your money can just voila and nothing to like hold on to anymore. So one way is capital appreciation. Secondly, it is the fact that some companies can pay dividends and you have returns on your shares. Those are the ways. Those are the two ways. The two ways that you can get profit on your investment is, first of all, capital appreciation, which means that the money you've invested have either doubled or tripled, or you're getting like more than 50% of your money back on that capital, and you decide to sell, then you are going to get your profit because, of course, you got those shares for 100,000 and now you've sold it for 300,000. Your profit is 200,000. Okay, if that is the case at that time you're selling. Secondly, the fact that your company is paying you dividends, they might be giving you 18% annually for the shares that you're holding, or they are giving you companies will want to share that percent. If it is 18% they are giving annually, they might want to share it throughout the year. They might be giving you quarterly, that's every 3 months. They give you a certain percent of what you're holding, the shares that you're holding with them, if they make profit. Emphasis on if they make profit. Okay? If the company makes profit, they are definitely going to pay their shareholders. And by the way, it's not every company that actually pays dividends, but a lot of companies out there pay dividends. And that is why you do not need to leave your money in a regular bank account. Yeah, I've worked in the bank before, not even too long, just like a year or 2 years ago, before I resigned. Okay, for personal reasons and for personal situation, I just had to resign because at that time, the job is not really going to serve me anymore because I really had to like do something else with my life. Okay, that is the season that I was, and the bank actually served me and I served them. I did my best. But for now, I will tell you with my full chest that you don't have any business investing and leaving your money in a regular bank account. No. Sorry, sis. That money is going to do a lot for us. So you have to pull it out and invest in stocks, buy shares. Even the banks that you're leaving your money in have stocks. They have shares. They have higher accounts where they give higher interest. But why are you leaving it in the account, normal savings account, when you have only 3%, 2%? In short, some of these high and mighty banks are giving just 3% or 5%. Whereas when you go ahead and put that same money in a higher account with the same bank, you're going to get like 10% or 8% or even 9% on that money. That's for a high yield savings account. That's for people that don't know what higher account is. Higher account is a high yield savings account. Okay. So with the same bank, when you put your money in a higher account, they are going to give you like 10% or even more. Oh, and then with the same bank also, if they sell shares, when you buy their shares, they might give you as high as 17 to 18% annual interest. So tell me, sis, why would you leave your money in the regular bank account in this year 2026, like in this time and era where people are trying to like just do something that will help them? Why? So your money needs to serve you, sis. Your money just needs to serve you. That's just it. So if you've actually enjoyed this conversation to this point, please be a part of this family, be a part of this community. Hit the follow button, subscribe to this channel, and be part of this family where I'm trying my own quota to like build this community of strong women that are willing to actually take their faith and their finances serious in this year 2026. Okay? Until I see you next time in my next video. Ciao. And don't forget to make the first move when it comes to your money. Okay?